Welcome back to WellPod X. I'm Tony, and today we're diving into a story of a true financial pioneer, Jack Bogle, the man who made investing simple, affordable, and accessible for ordinary people. For a long time, investing used to feel like an exclusive club for a lot of people, a game designed for wealthy elites and Wall Street hotshots. But Jack, he kicked the door wide open. Today, I'll take you through Bogle's fascinating life, the bold idea that changed investing forever, and how his philosophy has shaped my own Vanguard portfolio. Before Jack Bogle became a household name in the investing world, he was just a kid growing up in Montclair, New Jersey during the Great Depression. His family faced financial hardship when his father lost their fortune to stock market speculation. It was a harsh lesson that shaped young Jack's view on money and risk. But here's the twist. Jack didn't let those struggles define him. He was brilliant, graduating from Princeton University, where his senior thesis laid the foundation for his future. The topic? Mutual funds and their potential to serve average investors. Even as a student, Jack was thinking about how to level the playing field for ordinary people. After graduation, he joined at Wellington Management, a mutual fund company. He suggested diversifying the fund's offering to include a balanced fund, one that combined stock and bond to reduce risk. This unconventional idea caught attention and eventually led him to create Vanguard in 1975. Here's the part that really gets me. Jack Bogle didn't just create Vanguard for profit. He structured it as a client-owned company. That's right. Vanguard's shareholder are investor in its fund. No external shareholder demanding profit, no high fees, just a mission to serve the people. Revolutionary, right? Now, let's forward to 1976 when Jack Bogle introduced the world's first index fund, the Vanguard 500. Wall Street laughed at him. They called it Bogle's Folly, saying no one would want a fund that aimed to match the market rather than beat it. But Jack wasn't swayed. He believed trying to beat the market was a losing game for most investors, and he had the data to prove it. Instead, he focused on keeping costs low and letting compounding work its magic over time. Here's why index funds are so powerful. Imagine you're running a marathon. Most fund managers try to sprint ahead, tripping over high fees, bad timing, and overconfidence. And Jack's approach? Just keep a steady pace with the market, and over time, you'll outrun most of the pack. And this is where the magic of low-cost investing truly shines. Let's crunch some numbers to see just how much of a difference fees make. Imagine starting from zero, investing £500 monthly over 30 years, and with an average return of 7% annually. By the end of 30 years, in a high-cost active fund, you'll end up with £525,200. And in a low-cost index funds, you'll end up with £600,528, paying just £9,400 in fees over 30 years. In a high-cost fund, which fee would eat up £84,785. That's the money that you could have kept to reinvest, fund your retirement, and even take the family on a dream trip. Fees might look small on paper, but over decades, they can massively shrink your wealth. This is why Jack Bogle's focus on low-cost index funds wasn't just revolutionary, it was life-changing for millions of investors. Today, my own portfolio reflects Jack's wisdom. These funds kept my cost low, my strategy simple, and my return steady. What I love most about Jack Bogle isn't just his genius, it's his humility. He didn't live lavishly or chase fame. In fact, he often criticized the very industry he was part of. He once said, the mutual fund industry has been built on marketing, not on performance. But that rebellious spirit made him a hero. Jack put people first, always reminding us that investing is not meant to be exciting. It's about discipline, patience, and keeping costs low. Even late in life, he remained outspoken. When asked why he started Vanguard, he said, I built it to fight the system. The fight he did, turning Vanguard into a trillion-dollar giant and proving that doing the right thing can still be widely successful. Now let's talk about Vanguard today. Vanguard, renowned for its low-cost investment philosophy, has recently adjusted its fee structure, particularly affecting UK investors. Starting 31st January 2025, a £4 monthly fee will apply to DIY investors with account balance up to £32,000. Replacing its previous 0.15% annual charge. This change means that the investor with less than $10,000 will experience higher fees, while those with larger balances may benefit from reduced cost. It does look like even Vanguard has to adapt to keep their businesses sustainable. Even a pioneer of low-cost investing need to find a way to balance serving their client and staying competitive. So do you think index funds have changed your investment journey, or if you're still on the fence about them? That's it for today's episode of WellPod X. Stay invested, and I'll see you in the next one.